What's futures trading tip of the week?
Um, I don't know if I went over this in full detail before, but to my futures traders, having too tight of a stop loss is almost worse than having no stop loss at all. A lot of times, when we're looking to get into a move, we're looking to protect our account. And both of you can speak of this from the options perspective, but sometimes you can have a stop loss that is so tight that you don't even give yourself room to be able to let the move fully mature. So I know somebody last Friday who probably missed out on like 60 grand having a stop loss at $1,200. Like, I get it. If you're trading a bunch of contracts, you want to have protection, but you need to put your stop loss in places where the brokerages and competition won't hit your liquidity sweep zones, and stop loss zones, and hunt there. And also too, like we were talking to one of our good friends before this, you have to know the exit before you get in. So if you're going to lose $6,000, but the upside is 60 grand, why cut it off at 1250? You go into it knowing, put this in chat, go into it knowing what your maximum loss will be and what your maximum profit target will be, but having too tight of a stop loss damn near is worse than having no stop loss at all.
It's a terrible feeling. It really is. It's a terrible feeling
for it to go down and then go where you knew it was going to go. Oh my God.
Yeah, it's tough. I think that's why a part of that plan, we always talk about having a plan, is figure out what that threshold is. I know some people don't have a strong threshold, so it might be a 20% pullback. But especially when you're talking about equities, that's a correction, right?
Yeah.
When you talk about futures and options, that's a blip 5
on
minutes,
the radar. Yeah.
Right? Like that could be in 5 minutes. And so you got to take that into account, how volatile that these assets move or these derivatives move. And so 20%, it feels like, all right, depending on the company, that feels like it's safe. But, like I've said, I've depending on the company, NVIDIA, I've taken a stop loss off because I understand the company, I understand how the market moves, and I understand the long-term vision for it, which is why we always buy time. And so if you don't have time in it, right, and you're having these, you're going to lose out. So putting that there, I like, and I know Ian, we've gone back and forth. When I'm doing an option call, 30 to 40%, I feel like is a safe space. Now, like I said, depending on the company, that'll change.
Quality of the company, yeah.
Quality, Micron, I've changed that for. Microsoft, I've changed that for. But like Super Micro, right? Once it hits a threshold, I gotta go.
Yeah,
I gotta go. I don't love, right? I'm not in love with the option trade, right? It makes sense, and I feel like it can make money. But if it's not making money, then there's another opportunity where we can put that capital. So have a plan before you enter any position. We can say it, but most people still don't do it, right? Like we talked about our close friend, made money, and now it's trying to figure out what should I do.
You have to know the exit.
You got to have a plan.
Enter. Yep, because you can't figure out how to assemble a plane on the way down. I know they love to say that in Silicon Valley, like figure out how to build a plane on the way down. It doesn't work that way in real life. You're gonna crash out every time. And also, too, even with the asset, they were trading the ES Mini, the S&P 500. I'm like, if you knew the market was falling, why have such a tight stop? And we've been falling, but it's fear. It's fear. A lot of it is not knowing your entry, not knowing your exit, when you're going to profit. And then the other part that isn't talked about enough is you're doing so many different things. And when you're trading, you end up getting confused on how this is going to pan out. That's why I say trade one way in, one way out all the time. So you can have a huge data set to know what the outcome is going to be.
Yes, there's that psychology. We were like talking about it before, but it's that psychology. The fear comes because of the lack of education and experience in it, which is understandable. What is the other side of that when you see people win, right? Like if you're watching people, especially when you watch people on social media, it's like, man, they've had percentage gains. Psychologically, do you think that works as a detriment, or is it more advantageous to say, oh, I should be involved? I often wonder how people view that.
Maybe both. Rashad, what you think?
Yeah, for sure. I think it psychologically definitely plays a part as far as investing is concerned, because no one wants to lose money, and then no one wants to have somebody make more money than them. So it's a catch-22, because you don't want to lose money, but then the risk of making money. So you constantly kind of,
run your own race. Yep.
sure.
Keep your eyes on your own
Ooh.
paper.
I think that's a bar right there.
Keep
The
your
risk of
eyes.
making money.
Mhm.
Like you already said, the risk of making money, which is
Mhm.
like, damn, that just sounded crazy just now. But like that's
Because
where we're at.
you're seeing other people post their gains, but not always their losses. And on top of that, when you start to have too much comparison, that's when the FOMO and the over trading and the over leveraging really kicks in. It really
Yeah.
kicks in. Just focus on your race, follow your plan. And even like I told you guys in InvestFest, use Chat GPT. It can tell you the directions. Like, and I know some of you guys are doing that, but even with the technology, if you don't know what the outcome is going to be based on a number of 40 or 50 trades, GPT not going to save you. You can have all the right information. It's happened on the show. All the right information, and then you choose to do the opposite of it. Like just follow your plan through and through, and then
Yeah.
upload your data from NinjaTrader to be able to see, hey, okay, where could I improve time in the market, profit factor? Did I get the direction right? Have it
Yeah.
be your coach, but you have to go through and follow your plan every week.
Yeah. I got a random question, and it's kind of like in that same realm. When you have winning years, right? Like you've compounded winning years, probably for the last 4, right?
Mhm.
Does your risk tolerance become greater, or do you stay as disciplined, right?
Okay.
Do you say, hey, I might try this now because even if I have a loss here, I'm going to offset that by my unrealized gains that have been positive for 2025. Some people, I'm starting to notice that they're becoming riskier and riskier as they've had positive gains.
I think one of the biggest mistakes is to deviate from what got you to where you are. And as you assume more risk, that's the time when Trump will be F China 300%. Like something always go wrong when you deviate from your plan. Can you scale up because you have more capital in your account? For sure. But the risk parameter, like my targets have not changed. They have not changed. Like the amount of contracts as more money has come in has changed, of course, but I'm not saying, well, if it draws down 50%, I'm like, no. I
But
think
then
people
also, I think that it's a number that you have to work backwards to see what you want to
reverse engineer.
accomplish.
Yep.
Yeah, because sometimes if you have, let's say, $300,000 and you put it in one stock, sometimes getting 50% on that 300,000 might be more beneficial than taking a risk with 50,000 to get 300% because of the risk reward ratio of
Yeah,
like,
it depends on your
if
tolerance.
you put money in Nvidia stock, it's not worst comes to worst, just wait. But
Yeah.
if you trade in it, then it might go down. You might not have enough time to recover. You
It
might
all depends on your stat. People don't look at their stats enough. Like
Yeah.
I'll ask people, if you put $10 in, what return are you getting over your last 42 trades? They're like, well, I think that no, what do the stats say? So if you're only getting back 1150, you should trade less. If you're making $55 for every time you put 10 in, or $18 or $25, up the risk. But it has to be based off the stats, not emotion.
Yeah. I asked that because of the conversation I had this weekend with some of the young kids in my neighborhood who have been in like solid positions and were having a great year and decided that, hey, we're going to try to trade Beyond Meat. And I'm like, well, is it because they've had success that they have now saying, all right, let's take a risk here because we've gotten gains? And I'm like,
it's ego.
I see that. Yeah.
But it's also you take more risk when you have less to lose. That's what Rick Ross told us earlier. He was like, when somebody got the box Chevy, they're going to take risks that somebody with a $5 million, mansion is not going to take.
Take for sure.
Because it doesn't, like I said, 10,000, 15,000, 5,000. That's a lot of money. I don't want to, but I'm just saying, if you got $500,000,
or $2
now
million
you might have enough courage to just let it ride. Let $500,000 ride on a trade, and you can make $4 million. Or you might just say, I gotta have too much. One thing, the number one rule is not to lose money.
Repeat that, please.
That's the number one rule, not to lose money and to respect the money. So when you have more to lose, you have a higher level of respect for that money.
For the capital, yep.
Because it don't really matter. If I got $500 in the grand scheme of things, it doesn't really matter, right? But if I got $500,000,
it matters a lot.
Because if I lose that, I might not be able to get that back. right?
Act
That's
like
how the
Charleston
average
White.
person is thinking. It's like, yo, it took me forever to get 500,000.
Mm-hmm.
I can't afford to lose 500,000. I can lose 500. I'm not losing 500,000.
And what happens is like we'll get a bunch of wins. Like this
Mhm.
happened like when I first came across Art. So he gave me a blueprint. Like I shorted Research in Motion, shorted another company. So at the time, I'm like, oh, I don't even need to listen to these rules. Then Cisco. Certain you have to know which are fallen assets first that you can short. And sometimes you can have a good run. Let's say it was NVIDIA, AMD, Microsoft. Now you're like, well, I can make something happen with Beyond Meat. It's like the fundamentals of that company, the entire sector is falling apart.
Yeah.
Well, it's like baseball. You start swinging at pitches. The worst thing you can do as a hitter is start to swing to hit a home run.
Yeah.
You got to stay within your rhythm, because when you start to swing to hit home runs, you start overreaching. You start swinging at pitches that you shouldn't be. It's the same any sport, right? Like basketball. When you go into it thinking, I gotta score 35 points,
it never goes that way.
You're going to take bad shots. You're going to not pass the ball when you should be passing. You're going to get out of the rhythm, and then you're going to have a worse game than if you just actually went with the flow. For futures trading, do you recommend scalping or holding for a month? And can you explain the difference?
Scalping is a short-term move, so it's anywhere from 1 point to 4 points. You'll usually be in the market from 1 to 10 minutes. Long-term holding is like, because you only have a 30-day window in futures to be able to hold the asset. The answer is, well, the downside of holding, it costs a lot more. So if you don't have the capital to be able to hold those positions for a long period of time, that will suck. So right now, so like for one contract on the S&P 500 future is 24,000. If you trade it intraday, it's 500. So even in the price, if you hold for long term, you have more of a guaranteed move, but it costs more. If you scalp, there are advantages, but my thing is you should only do 4 to 6 scalps per month because most people overtrade. So my answer is always to do whichever one you're most disciplined with. Should you scalp? Yes, but you should not. Usually once a week, maybe 6. But what I see when people start scalping, it becomes so easy. It's almost like gambling, right? You'll win a move, let's say $4,000 in 3 minutes, and then you're like, oh shit, if I just do this 4 more times, and now they got you. Now you in the prize picks 9-leg parlay loss move. So it's still, even if you're scalping, shout to prospects. But if you deviate from your plan, you're going to have a lot of destruction. Scalping is good, but you want to be able to hold the asset longer. So that's why I recommend like trading off a higher time frame, like a 1-hour chart. And if you can hold a move for an hour, 2 hours, you can get more sizable gains.
Scalping, that's a disciplined like thing to do, because you gotta, like, what's the setup for somebody that's scalping? Is it like they got the screens up, they're watching the minute chart? Like how is somebody...
I would recommend that never use the minute chart. And I
Okay.
probably shouldn't say this publicly. You shouldn't trade off of odd time frames. It's a mistake. Huge mistake. 1, 3, 5, 15. Those are not the time frames you should trade on. Trade on even time frames.
Okay.
Even time frames. Let's talk about Bitcoin.
Okay.
Hello. Some wisdom right there, boy. Ooh.
Bitcoin fell 8% last week, and as crypto continues to pull back, and then it's kind of been, up and down. 6, 7. How long will this drop continue, do you think?
I mean, first I want to say, like, it's interesting to be on the side of the coin saying this. I don't understand why people are so afraid when the drop really hasn't been that deep for crypto or Bitcoin. I had a lot of people hit me this weekend asking, like, is Bitcoin over? Like, I'm like, this is the time to buy it. Like, and I literally said on the show last week, I'm like, okay, anywhere from 102 to 103 or 105 is a buy area. Then we get to the areas and people are like, well, Bitcoin's done forever. Not according to BlackRock and Vanguard and Larry Fink.
Well, that's why it's vitally important to know when to invest.
When to invest. Yeah.
Like, you know what I mean? Because even when we were on tour, and I'm about to tie this all in. But when you said Bitcoin, it's a time to invest in Bitcoin. I put it in my stories. I'm like, you got like Bitcoin at 80,000. It's like 70. And that at that time, people
People
were
getting killed.
nervous
Yeah.
that it was going to go back to 50,000. And now it's over 100,000 since June. It hasn't fallen under 100,000. So like that's why like when you talk about stock club, it's one of these things that's like, yes, dollar cost averaging is always recommended for sure. But if you really, it's like
You want to get a higher return?
knowing when
Mm-hmm.
to put money in can actually change the whole trajectory
Yeah.
of your portfolio.